Like the sound of 80 degrees in March. Sounds good to me. All right, interest rates hit record lows last week, so now could be a good time to refinance a mortgage or borrow some money. Now, this comes after the stock market fell yet again, but it is now bouncing back. We have our financial advisor here, Steve Budin, for Financial Focus, as we do every Tuesday. Every Monday. I'm losing track of the days already.
Don't scare me like that.
Let's set the stage, though, because it is hard to kind of find a silver lining based on the fact that we had our worst week last week on Wall Street since we had the financial crisis in 2008. But I know that we just kind of mentioned how there's some reason to look up a little bit. We've already seen the Dow bouncing back more than 700 points today at last check. That's a good sign. So why is now potentially a good time to refinance?
Yeah, basically what happened over the last week is when the stock market goes down, most investors will run into the bond market. They'll invest in bonds. They tend to be a more conservative, safer investment. Sure. If you buy bonds, the price will go up, but the interest rate on those bonds tends to drop. And what will happen is mortgage rates and loan rates are usually tied to where the bond market prices interest rates. Last week, we actually had our Treasury bonds, the U.S. Treasury bonds, hit record lows. So mortgage rates and other rates are tied to those benchmarks. You now have mortgage rates, you'll probably see them this week come out really low. If you have a mortgage that you took out maybe 5-6 years ago, chances are the mortgage rate you see this week might be lower than you had before. It might be time to take a look.
Worthwhile to keep an eye on those interest rates for sure. And just, there's been so much fluctuation with the market lately, and I know you've touched on this, but can you just, again, I mean, it always gets boiled down to simply this is all because of fears over coronavirus, but specifically what is driving the market to plummet like we saw last week or even now bounce back like we're seeing today?
Yeah, I think the primary fear that's out in the market is how long this will go on, because what happens is if more and more people get infected, more companies will quarantine them. You're seeing it now, right? There's more travel advisory warnings going into effect.
Yeah.
But a lot of these folks may work in factories overseas. They may be making the automobiles. They may be making iPhones. They may be making computers. If they're not in producing, those items can't be purchased. If they can't be purchased, sales can't be made, and then prices and profits go down.
And when you hear reports like, it might be a year or a year and a half before they have a way of curing this or at least stopping, the spread of the virus, that leads to some of that uncertainty on Wall Street.
That's right, because you don't know when it'll end. And if you knew for sure when it would end, then the markets can react accordingly. We just don't know at this point.
All right. Thanks so much for the time.
Sure.
That was Financial Focus. Steve Budin, everybody. We'll be right back.